Good morning. It's the 3rd of June. We are Signal Centre Talking Ball. I'm Joe Noble and I'm joined by Steve O'Hare. Good morning, Steve.
Good morning.
All good?
Very nice. Yes, it's a bit hot,
Cool.
isn't it?
Yeah,
We've
too
got
hot.
no.
Yeah, too hot. Keep
Yeah,
it, keep it coming.
yeah, exactly.
Um, yeah, cool. So, straight into the news then. European Union passed 250 million vaccinations and is on track to reach its target of inoculating 70% of adults in July, which is great news. Hopefully going to get some restrictions lifted in due course. Obviously, we're hoping for a complete unlock in the UK as of the 21st of June. I don't think anyone really thinks that's an actual possibility, but maybe if we can unlock some bits, maybe add a couple more countries to the green list, and maybe there's hope that we can go on some holidays abroad and start to feel a bit more normal. In terms of what's going on in the geopolitical scene, bit of a tit for tat going on with Germany and Russia at the moment. Germany has suspended its permits for incoming flights from Russia, which includes airlines like Aeroflot and S7. So waiting to see how that kicks off. We've also got the US and China discussing plans to amend the US ban on investment companies linked to the Chinese military. That was something that was put in place in the Trump era. And Biden's looking to make some amendments to that, which will change the criteria for the blacklisting and enable companies, sorry, people to invest in defence or surveillance technology sectors. So, again, that may be an easing of the tensions between US and China, but we'll wait and see. In terms of data today, we've got the ADP report, which typically is out on a Wednesday, but this week it's out on a Thursday due to the fact that we had this holiday at the start of the week. We've also got initial jobless claims ahead of the non-farm payroll number tomorrow. So markets are a little bit tentative ahead of this glut of data that's due out over the next couple of days or so. So there hasn't been huge amounts of movements in markets, but we will get stuck into some charts and see what's going on this morning and how we would be looking to position ourselves ahead of the all-important non-farm number tomorrow. Steve, anything you want to look at initially, or should I dive into
No,
FX?
just wondering about that German-Russia flight thing. Is that down to the Belarus thing? Is that how it all started, or is it why they got doing a tit for tat thing?
Russia unilaterally suspended bilateral agreements on airline traffic in March 2020 due to the coronavirus pandemic. So it's more
Oh,
coronavirus
okay,
linked.
okay. I thought it was the Belarus thing or something.
No, it doesn't appear to be.
Uh, okay.
I'm gonna dive into FX just because there's a little bit to talk about on dollar index. Obviously, this is typically the starting point for us when analysing FX markets. And as we've been saying for some time now, the dollar index has been stuck within this range or this downtrend channel. We did see a bit of an attempt at breaking out above the channel last week, but that was met by selling interest and it closed back within the channel. And magically, we saw the same thing happen yesterday. So there was some real bullishness early on in the dollar index. Looked as though we were going to close above this downtrend channel, but we closed back within it. It's quite fascinating at the minute. So we're up again this morning. If anything is to go by from what we've seen previously, then this is a fantastic opportunity to fade it in anticipation of it closing back, but within that channel again today. What I would add though, and in a slightly different change to what we've seen previously, is that we actually opened outside of this channel today. There was a gap open for the start of dollar index today. So is that potentially a sign that we're going to see a corrective move to the upside as a result of this broken channel? Maybe, but certainly, we have seen some late selling in dollar index previously.
Them last two candles can be bullish candles as well. Obviously, that inverted hammer, yesterday's inverted hammer, can be seen as a bullish candle.
Yeah.
Where it probes higher and fails, but then sort of that sets itself up for the next day. And obviously the candle before that, bullish hammer. So from a candle perspective, it looks quite positive. And like you say, as it's opened outside the channel, maybe this is it. Maybe this is the day for the dollar.
Maybe.
Dollar day.
It's been a long time coming, but obviously we've got this support here as well, which is at 86.70-ish, which has done a pretty good job of preventing downside. So all this sort of pent up kind of positioning and the battle that's been going on between the bulls and the bears may be about to be resolved, and we're going to see a move to the upside. So let's have a look at what that's done for euro dollar, because obviously this is the flip side of the dollar index chart. I will just remove this quickly, but we've got this channel. We saw a break intraday, but then a close back within it, and again we've seen a close outside, sorry, an open outside of the channel. Again, you know, this could be potentially seen as a bullish setup from a candlestick perspective, and we are making waves on the downside today, already down by 0.25% on that one. So worthwhile keeping an eye on this. The annotation that I just deleted was a potential head and shoulders top formation setup that I've been looking at for a while now. It is only potential because it's got a hell of a lot to do before it confirms. But I think if we break down below this support here at 121.32, then potentially we do open up some downside targets down here at the potential neckline of a head and shoulders top. And if that is to break, then we are targeting moves as low as this 1.1055 over the medium term. So quite interesting there. Still got lots to do, but expecting more choppy price action. If we get a close below this level, then I think things become a little bit more interesting on the downside for euro dollar. If we look at cable, that's stalling at this massive resistance level here that we formed from the highs on the 24th of February. Big rejection there on the 1st of June, combined with an engulfing candle. Not much done yesterday. And a bit of selling today. So potential for this to dip down to fill this gap that was open at 139.85, which also quite nicely marries up with the sort of medium to long-term trend line on that one. So be looking for a pullback or opportunities to sell into rallies in the very short term in cable. Looking at some of the other dollar markets, just to get an indication as to whether or not the strength is seen across the board. Not much happening against dollar CAD at the moment, still within this aggressive downtrend channel. Needs to get above this 21.44 level to really create any kind of excitement, I think, on that one. As you can see, the volumes have been dropping off a little bit, and some support has been found at this big round number at 1.2000. If we look at dollar Swiss, that's potentially broken out of a downtrend channel, just in front of a 78.6% fib level as well. So maybe we are seeing some support form here, and the break of this channel could lead to a move to the upside. A lot of fresh air to move into here following this corrective move, so worthwhile keeping an eye on that. Dollar yen has been my favoured pair to play dollar strength if that's what you've been looking to do. It's trading quite nicely in this uptrend here, and any pullbacks towards the trend line seem to be attracting fresh buying interest. That's again on the front foot again today, up by around about 30 ticks. I think if we can take out the high that we posted on the 28th of May, then that should open it up for a move to retest these highs that we posted on the 31st of March at 110.96. If we look at some of the riskier assets like Aussie versus the US dollar, still really choppy in here. Not a lot to decipher in terms of direction at the moment on that one, so just watching and waiting for now. And if we look at New Zealand dollar, US dollar, that's running into some resistance around here at this 61.8% level from these highs on the 25th of Feb to these lows posted on the 26th of March. Again, lots of choppiness going on here in terms of the candles. I think if we start to break down below this sort of mini wedge formation, then that may open up the downside towards the 69.43 level that was posted again back in March. So that's pretty much it on the FX front from me. Certainly some signs of things potentially beginning to happen, and again, it's all being driven by what's going on with this dollar index. We have seen a close outside of this bullish corrective channel. Whether or not that leads to a correction higher in the short term, we will have to wait and see. That's it from me. Steve, I'm going to throw it over to you. You can talk us through some indices.
Yes, thank you very much. One interesting one, which I will come to. It's not the first one I'm going to go to, but China I'm looking at. But initially, we've got positive days, last couple of days for FTSE. We can see it's building up in this sort of wedge formation. Haven't quite made it to the highs of 10th of May, but sort of making our way there. However, we have had a bit of a short-term collapse where price action has moved below yesterday's lows at 70.66, just trading below there now. And we've got Ichimoku cloud support coming in here, which looks like decent support. But having said that, if we do manage to sort of like break below this swing high here, which would be support now coming in at 70.54, then I believe we'll carry on down. So that would be interesting. Looking at the DAX.
Just a quick one on that, Steve. I think there was quite a few dividends on the FTSE 100 today.
Oh, I see. Would that have filtered in just now then?
It would have filtered in on the open, but
yeah, well, this is that hour, yeah. So maybe opportunity then. We are, if we look at the 4-hour chart, we have got decent resistance at 70.40 as well. So and this upward trending support line, which goes all the way back to January this year.
So we had, just to confirm, National Grid was 30 odd p, which is 3.35% impact on the share price.
Okay.
We had Kingfisher as well, paying a couple of dividends, and Associated British Foods. So I don't know if it's have that much impact, but if you're seeing it across other markets as well, then
yeah, it's seen a little bit across other markets. So I think that would add to it, but there is a sort of like bigger picture as well, where the indices are getting a little bit of a hit this morning. So DAX is we've got support coming in at let's see, make it blue, it's a support line. 15,500, just below 15,550. That's the first real support. A break there again could open up a little bit of maybe downside. We've had a decent run in the indices this week, so wouldn't be much of a surprise. And again, if we see where this upward trending support is coming in on the Dow, it's all the way down just in front of 34,000, 34,080. So a little bit of a head and shoulders type formation playing out on the 4-hour chart in the Dow. Nasdaq, similar type of price action. We've been seeing this sideways since the 26th, sorry, since the 24th, since last week, and not really much going on. So this bearish outside candle on the 4-hour chart in Nasdaq has sort of like led to a little bit more lower consolidation. S&P's it made its way up to 4,233 yesterday, but again we've sort of seen bearish price action overnight, so potential for a retest. Aussie 200, signs of a topping price action on the 4-hour chart. We've got a evening doji star formation. That will be confirmed at 10 o'clock when this 4-hour candle finishes, and that would be again a bearish sign, and it's also placed price action below this quite solid upward trending support line, which we've broken down below and we've retested numerous times as we've sort of ground higher. The interesting one for me is really the this on the hourly chart, and it seems to be sort of like the same times every day when the market either opens or whatever. It's this sell-off we're getting, and the volume spikes high. You can see them. People taking it as an opportunity to sell. The price action drifts higher during the day, and the next day on the open they sell again, and they sell again, and they go again. So for me, this is like basically showing a really important support at 18,000 in the China 50. If we get a break there, I think it is game over for them guys. 17,735 would be like a vacuum move. That should be a very quick move, as we see here. There's not a lot between there and let's lose volume for a minute. Yeah, there and there. There's the sort of like the predicted vacuum move if we do get a break of 18,000. So definitely one to watch. as we sort of like approach towards the end of the week, really. So on a weekly basis, if we look at that, we were looking for an ABC correction. We had the shooting star 3 weeks ago was wiped out by this break above this channel formation that we were highlighting. However, we are giving up those gains this week. So potentially the ABC could be something like that. And then we could get this as a measured move target. Again, still close to the same level, around about the 14,500, 14,700 area. So watching that, especially if we get a continued sell-off into the end of the week, you know, I mean, it's a long way off, but even if we were to engulf this candle, then that would really sort of like put the odds on a favor a move down. So that is indices. Let's jump to commodities. And let's jump straight into oil. Oil's still performing well. I did a video on this yesterday. Nothing really holding it back at the moment. On a weekly basis, looking very good. Daily basis, momentum stalling a little bit, volumes dropping off a little bit, but it's still pushing towards those highs. Plenty going on in the oil world, and it's remaining bullish at the moment. So that we've got that, and Brent as well pushing above the previous swing highs. On the longer term chart, I've highlighted this impulsive move higher, wave 1 and wave 3, and the fifth wave will be positive, but the fifth wave should be shorter than wave 3. That's what we're expecting. We're expecting the push higher to be capped around about this next resistance level. It's still $8 away. So yeah, it seems all lights are green for oil at the moment. On the gold side of things, a little bit of a pullback from this resistance level we've seen. We made a new high this week compared to last week, but we've retraced and we're forming a bit of a shooting star candle on gold. So it's a bit of an early warning sign. We've still got a couple of days to go, obviously, and we are showing the support line coming in at 1890. For me, that's the pivot level. If we get below there, I think we've got a further weakness. Could push us down to 1875, possibly 1850. But 1890 has acted as decent support so far. So we're getting the move down. It's on the daily chart, we're forming a bearish outside candle at the moment. So if we maintain these lower levels, then that's potentially negative for tomorrow. But I'd still like to see a break of 1890 before we get excited on the bear side of things. Looking at the 4-hour chart, bit of a head and shoulders formation potentially. Still got a bit to play out to sort of prove this. But here's a move up, left shoulder, neckline, head, and there. So not the greatest of one. It would be nice if we got a head and shoulders a bit like that. Sometimes you don't. Sometimes these are still good indicators. So yeah, it's looks like it's broken the neckline from this perspective. As I say, I prefer to see things a little bit more symmetrical. But even on if we sort of like bring the neckline down to here, it's still broken it. So yeah, potentially negative for gold. If we see strength in dollar, that'll probably filter through and put even more pressure on. Let's have a little look at cryptos. Bitcoin's looking pretty positive. We've got this triangle formation that we've highlighted, and we are just trading above it just now. So from a 4-hour perspective, that looks pretty good. However, if we drill down to the hour perspective, obviously we're very much into the short-term trading on Bitcoin. We've seen this hanging man candle followed by a bearish outside candle on the hourly chart. So for me, again, I'll possibly going for head trade on this. I've done it every day, I think most days this week, and it's worked quite well selling it. I'm not going to give up on it just yet, just because it's broken out of the triangle. This could be just a test. The high came in around about 39,000. For me, the main resistance would be 39 to 40,000 before we see 43, then 46. So I'm going to probably fade that in the gun to head. Just because of the hourly price action, and I can keep the stop really tight and look for just a minor correction to sort of get a good risk reward, and that's it.
Okay, thank you, Steve. Okay, guns to the head from yesterday. So we, as Steve mentioned, has traded Bitcoin a few times now, 3 in a row actually for you, Steve. I've got you as being stopped out yesterday. Is that right?
Yeah, I think it's got stopped out by a nano.
Not by a lot in crypto
No,
world.
a Nats thingy-majig.
Yeah. So I had a long on gold, which come 9 o'clock was nicely on side. It has died since then, but managed to capture 1.32R on that yesterday.
Nice
So quite nice. Made money overall between us, which is always good. So Steve, you mentioned you were fading Bitcoin today.
Yeah.
Does that mean you're ready with your parameters and want to?
I'm ready to go, ready to rumble. So the high of this candle is 39,051. I'm getting short here at 38,783, and so that for me, sorry, stop. We can go a bit tighter than that. Let's go there. And that gives us a 4-to-1 risk reward. I'm quite happy with that. So my stop is at 39,083.66. Target is 37,583.66, giving me a 4-to-1 risk reward. If it cracks above the swing high of the day, then potentially it could go to the sort of 40,000 area. So I'll stop there. Yeah, 4-to-1 risk reward.
Lovely. I'm going to take a look at the FTSE 100. As you pointed out, it's had a pretty severe drop this morning. I have a support level there in red at 70.53, just using these previous highs that we saw here, and obviously saw a big impulsive move up. So we are now retesting this by the looks of things. So I'm going to place my stop below the low of this impulsive candle here, which was posted at 8 o'clock on the 1st of June. Going to buy it right now, and the current price is 70.55. Going to target a move back up to these recent highs at 71.21, and the stop of just 20 ticks at 70.36. So looking for just over 3-to-1 on that, 3.25 to 1 risk reward.
Excellent.
We shall see. Okay, so day ahead, we've got a number of bits out today. As I mentioned, we've got the US ADP, which is due out 1:15. Normally out on a Wednesday, but out on Thursday this week due to the holiday that we had in both Europe and US on Monday. We've then got initial jobless claims backing that up straight after at 1:30. Then we have the US ISM non-manufacturing PMI, followed then by crude oil inventories. So lots going on to keep us interested. That's obviously ahead of the non-farm payroll number tomorrow. So that's pretty much it from us, I think.
Yeah, brilliant.
Okay, so I'm not in tomorrow, Steve, so you'll be flying solo on non-farm Friday.
Oh no! Why?
You'll be fine.
Okay, I'll do my best. I'm getting a little bit. I quite like these little banners we have on the side, and we can change things up, and we can sort of like say what the prices are showing now. And I might do a little bit of preparation, and
Okay.
they might the crowds may say, we don't need Joe. Steve's doing a great job.
I would like that to be the case.
Yeah, I know you might.
I get a bit of extra time in bed.
Yeah, exactly. Yeah, no, okay, mate. Have a good time off, and yeah. So you've only had like a 3-day week this week-ish.
2-day week.
2.5. Yeah.
Yeah.
Not bad, is it?
It's all right, isn't it?
Yeah.
Well, we'll be back on Monday.
All right. Where are you going?
Just to Suffolk.
Nice. Not
Yeah.
just Suffolk. Suffolk is like the Marbella of UK at the moment.
Just
It's
hopefully the
lovely
weather
weather
stays
up here.
nice.
Yeah, I know. It's just sort of clouding over at the moment, but I think we've still got that high pressure zone.
Oh, look at him. He's doing not just technical forecasts, weather
Yeah,
forecasts as well.
exactly. Yeah, come
Join
here
us,
before
join us
Michael
tomorrow for
Fish.
more. All right,
Yeah.
matey.
All right. Cheers, Joe.
Have a good day. Bye bye.
And you. Bye.